The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour on the 6th day of December. My pleasure to be here. And most important is that we're looking at a market that in the Chapman Wave methodology, we're always looking for peak Ds, the fourth highest peak. When that arrives, other things can happen. That's the expression. You can start a deeper correction. Just trying to find the pattern right now so I can demonstrate. There it is. So this is the pattern we're always looking for. You identify the lowest low bar, merely count each successively higher peak, alphabetically enumerated to the upside, uppercase letters, and the fourth highest peak, so it goes first peak A, second peak is B, third is C, the fourth peak is D. At peak D, the fourth highest peak, other things can happen. It could recycle to E, F, or G. It could recycle to a brand new buy mode that could even take you to another E. It's a fantastic tool that you can use. But at D, you can also see sharper declines. So it doesn't have to happen, but that's where you put your foot. You raise it from the gas pedal and you hover it over the brake because other things can happen. Hey, wait a minute, what does that mean? It means that if you're looking at the E-mini right now, if we don't go above 2665.25, this is the December contract by today, it's a peak D. The MACD, the moving average convergence divergence, is still very strong. The stochastic was very strong, but it's pulling back. Just get that off. And now, even more important, is that you've made a peak D in the unbalanced volume with a very sharp decline. So this is hinting that other things could happen. The weekly chart is still very strong, leg F/C. The 120-minute chart made a peak E at 2663.25 yesterday, pulled back sharply to 2633 in that sudden slump, made an arch formation, went above the peak that was made right here at 2 o'clock this morning at 2644.50 and held the low of 2633.75, went above that peak at peak A. However, it has not held it. That's going to be significant. So what we're looking at here, to make it real simple, on the day, if there is a close in the E-mini on any 120-minute bar below 2635, that's about 6 points lower than where we are. That's going to be very negative. If there's a push and a close above 2648.75, the high at 12 o'clock today, that'll suggest that we could go higher and try to fill that very ugly candle of yesterday that went from 2656s down to the 2638s. Make it real simple. Now let's get to the nitty-gritties. Let's get out of this, and I'm going to run the numbers. I've got a bunch of questions. Then I want to discuss what we're going to be working on in my all-day webinar coming up on Friday, 9 o'clock to 4:30. Probably start a little before 9. Probably go a little after 4:30 because we want to be looking at what do we look for Monday's action. How can we use all the information that that's been derived through the demonstration of chart after chart after chart, technique after technique, repeated over and over so you can practice it. I take the questions, I answer the questions. What will we be looking for? What patterns, what chart formations are going to become quite familiar? Okay, so here we are. The Dow is down 37 at 24,253. The high that was made yesterday of 24,534. Let me type that in on this chart. 24,534. If that's not taken out in the next couple of days, but instead we start to break below 24,200, there's a good chance that 24,000. There's a good chance that we will start to go into that very strong wick of 3 days ago. Let's go one thing at a time. I'm seeing rotational strength in some sectors, some stocks, but I'm not seeing it overall, number one. Number two is within the context of the monthly chart, the weekly charts and the monthly, those are still very strong. So any correction that we're looking at probably is going to be shorter term in duration if it's only mild in the next couple of days, if we can hold the 2400s. But if the Dow closes under 2400, I have to consider that the daily chart is going to a sell signal, probably going to a sell signal, not yet a sell mode, but at least a sell signal. A push above 24,534 is extremely good action. Says, you know what, we're just going to roll around, chop around for the rest of December so that we can close near the highs. Watch out for January. S&P, SPX.X, here we go. The S&P right now is up 2. Yeah, yesterday it was a divergence. The Dow was stronger than the S&P, way stronger than the NASDAQ and the semis. We'll be looking at that in a moment because right now the S&P is a little more positive, but it did make a peak D yesterday at 2657. Let me double check. 2657.19. Let me just update that, 0.19. And as a result, that'll be the number to pierce. It's going to have a tough time. MACD is very good. Stochastic starting to weaken on balance volume. In both cases, Dow and the S&P is very weak. Weekly chart good. Stochastic and the weekly is still 93%. That's really very good. We want to go to the QQQs. A nice rally today to the 9-period exponential moving average, having made a leg C to the downside. Remember, lowercase on the downside. So leg B goes to leg A goes to a trough A. Leg B goes to a trough B, and now we're in leg C. I think that this is going to fail. That's my opinion. I know a lot of people are looking at this and saying, good, now's a good time to be buying the semis and the Qs. I don't see it yet, based on the technicals that I'm looking at. The MACD in the weekly chart is good, hasn't broken down, but it is turning down. The stochastic is at 92% good, but also turning down. So is the on balance on the relative strength. And that says, hey, you've got some strength until you break and close below the low that was made back in November. That was November the 15th at 151.78. Let's say 151. A close below 151 changes the scenario completely for the daily, but certainly for the weekly. It begins a move below the 9-period moving average on a closing basis. For the first time, there was one little accident back on the 18th of August at 140.65. But basically, since the breakout, the week of 14th of July, the Qs have not, in the weekly chart, closed under that 9-period moving average. Now you're getting the turnaround in the technicals. We're going to be watching this closely. Let's go to the SMHs for now. SMHs tried to rally. It's at 98.17, made a lower low today, leg B to the downside. Look at the MACD and stochastic, very negative. And now you've got the weekly chart turning negative. I can see a bounce. I'm hoping for a bounce, but we haven't got one yet. And I think that bounce cannot. I just don't see what's going to take it above 101.50, 102.20 resistance. I just don't see how it's going to get there unless it starts a brand new buy mode. A lot's going to happen for that to work out. IWM, the IWM right now 151.99, testing the 9-period exponential moving average. Now this is in a leg C daily and a leg B weekly. There's no other way I can count it. That's going to make it a challenge for the Chapman wave, because we'd have to have a pretty darn good overall rally for the daily chart to break to a new all-time high and go to a leg D above 155.41. That's going to be the challenge. I'll be right back. Basil Chapman. Be back. Dow's down 40. S&P's up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Basil Chapman will be hosting a full-day Master Trader class Friday, December 8th from 9 a.m. until 4:30 p.m. This live 7.5-hour online class will teach you the complete concepts of Basil's Chapman Wave trading methodology, along with a variety of indicators and charting patterns that Basil uses on a daily basis, including the concept of higher peaks and lower troughs, the importance of the peak D, buy and sell modes, sustaining rallies and declines, MACD, stochastic, moving averages, on-balance volume, and much more. Everyone that attends will also receive Basil's CD book introducing the Chapman Wave methodology, a $249 value, along with 1 month of his daily trading newsletter, The Opening Call, a $128 value. Basil will be using live charts where and when possible in the webinar to show the concepts of his trading methodology, which works on all time frames. For all the details and to reserve your spot today, visit the front page of TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So I got a bunch of questions here, so let me just do this. I'll try to cover some of them as we do the finish the indices. So you looked at that, looked at the IWM. See, the vulnerability to the downside doesn't make that peak B says, oh, you're going to a C and a D. Peak B can pull back. You can even go underneath the trough that was made after peak A at, let's see, that would be 148, 144.50. We're at 152.09. You can go into the 140s and still be in B and then have another. You can even have an overlapping wave. It's part of the Chapman wave techniques that we're going to be discussing on Friday, where you start another move to the upside because you haven't broken the original buy signal, and you start a gray A, a gray B, and then as you go past, if that you pull back sharply, you go past the 155.41, you get an overlapping wave that goes to a C and a D. That's very bullish, but then it says you're going to be coming back to test some of the levels. But hey, we'll just deal with that as time unfolds. So gold trading right now. I had a question this morning. And it was a good question. I saw every reason to consider it as a very legitimate, good question at this time. Based on how incredibly strong the monthly candles are in the GDX, this looks like the perfect time to go long. Sure don't see this going much lower. Dollar isn't showing much strength either. So, I looked at it. I've spent a lot of time saying I don't want to miss the next big move in gold, but everything about it says that, remember I said the weekly chart is making the H pattern. It failed to make that curve, this little curve right here, another pattern we're going to be talking about. But the arch formation, these are deadly. Lately, they've been working fantastically to test and break the left side low. That left side low in the GDX, in gold, is in the continuous contract is at 1270.90. And here we are trading at 1266.30. And we're breaking the weekly double bottoms. This is not good. If it closes underneath, I'll tell you right now, if it closes underneath 1267.30 on Friday, that's not a good sign. And the monthly chart, I said it's got the H pattern that goes to a lowercase h. Let me squash this. Let's see. Oops, wrong one. I squashed. This is the squasher. This is it. This is the one that goes from an H pattern to a lowercase m pattern. Then it has to come down, and at some point, I think a little later on, it's going to scream to the upside and go above 1400. Excuse me. I don't see that yet. So that's gold. Now, the question was on the GDX, and the GDX right now is trading down about 31 cents at 21.89. It decisively only went to a peak C. Now it's a peak C minus. I'm going to be teaching that on Friday. This is the arch formation coming back down. I do see some attempts at support in the 2150, the 21 area. We'll see what happens, but it's not helping the monthly chart there. There were strong candles, yes, but now we're in this H pattern consolidation. Let me just show you, it's a rather large H in the monthly. So I'm prepared to wait a little bit. Now I can say I'd be looking at it if there was a sign of strength. There isn't yet. Silver, same thing. SI, it was a little weaker than gold before. Actually, now it is, yeah, still a little weaker than gold. All right, so silver has to hold 16, otherwise it's in trouble because, well, it's in trouble. And the upside resistance of both of them is about $20 higher for gold, and I would say 1658 to 1635, and silver is going to be very strong resistance. Now let me look at something else. If you're looking at crude oil, what was the question on crude oil? Crude oil. Mm-hmm. I'll get to it in a second. Yes, crude oil and the USO. The crude oil is holding very nicely here. It's up 8 cents at 57.55. My contention is being based on this particular pattern that went to an H, and then it turned around and became a cup formation. It's real simple. If crude oil closes under 56, I think it's going to be a real quick trip to the 55, 54 area. If it's able to hold here and just give it one little push, even just to 58.90, it's like $1.50 higher, that's going to say that there's a good chance it's going to test the previous high and try to break above it, and that'll be very positive. I would have to call that a new leg B or something positive at 59.10, let's say. So far, it's a high-level consolidation in the weekly. If you look at high-grade copper, and this is very interesting, high-grade copper is plunging right now, 2.96. Remember I said peak E in the Chapman wave, and the weekly chart is suggesting that copper's kind of done for now, but I am watching it. There was a nice move just about a week and a half ago. I said, watch that one. If copper was able to get to the 325 level, so 323 level, $3.23 level, that would be very positive. But right now, it's got that H pattern. You got to be wary of it. Plop. Today's a very serious down day. So copper is sort of out the picture. Wood is the iShares Global and Timber Forestry ETF. This is making that arch formation from a peak D in the daily and a potential peak F top. And I made a big deal about this for subscribers over the weekend. I said this is the first time it's starting to test the 9-period moving average in the weekly chart. Monthly is still very positive, but this weekly chart is suggesting that if there's a close in the 68 area, the low 68s in the coming week, on any daily basis, that's going to suggest it's done for now. You've got to be careful. Now I want to show you something else. The TLT. The TLT is having a nice move to the upside. And I said yesterday, everything about the chart is suggesting I think I'm paying the penalty for doing all those 3 days webinars, 10 hours or more a day, consecutive 3-day sessions all those years. Anyway, so now we're looking at this candle. The wick is being tackled right now. This is the wick of yesterday, 3 days ago, where it went to 127.69, low of 125.10. And I'm looking at the area right here that it says at 127.20, this is at 125.05. If we're going to hold there for 2 60-minute hours, I'd like them consecutive. It doesn't have to be, but if it can get there, there's a good chance in the next day or two we're going to go to leg D in crude oil. And that's going to make the weekly chart 2 cup formations in like a W in a U-shaped, 2 U patterns together, which makes a double U, right? And it took me years and years to figure out that's what it meant. This is a pattern that says, wow, if it can move into the 128s, there's a good chance. Or it has to go to 129.58 in the TLT to make a leg D in the weekly chart, and then that'll also make a leg D in the monthly chart. And I'm suggesting to you that if bonds go much higher from here, we're going to be looking at this and saying, okay, I think there's a chance that if there's a volatility that continues in the tech sector of the market, money could start coming out into somewhat into the safety of bonds. Okay, we've got a phone call. John in Philly. Hi, John. How are you?
Good. Good morning, Basil, or rather good afternoon. Thanks for taking the call.
My pleasure.
Say, I wanted to ask you a very specific question. Early in your show today, you showed a number of indices and your Chapman wave counts. I'd like to ask your question back on the S&P 500, the SPX, please.
Okay. So you want to shoot the question out during the break? I'll start working on it. What's the question?
I'll take too long for the question. I'll hold, though.
Okay. I'll be right back. The Dow right now is down 39.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with John in Philly. John, how are you?
Very good, Basil. So here's the question. You laid out the Chapman wave count and some of the parameters you're watching on the S&P. The question I've got is this. Let's assume, just hypothetically, that a top is forming right here. If that's the case, if that's what happens in the fullness of time, I'd like to hear you speculate, free think, using the tools and what you've observed with market behavior as to what the S&P would likely do on the first leg down and where it might go to, where it might bounce? That's
a fantastic question, because that's exactly what I'll be dealing with in many other charts on Friday. So this gives me a little preparation. Let me explain what I'm looking at. For anyone looking at the charts right now, no, I could put up the 10-minute chart, but I'm at 120, but let's just do the bigger picture. The daily chart, let me just open this nice and wide right here. What we're looking at are a number of aspects. There was a cup, a Chapman wave cup and ladle breakout, which says at any point when you get this cup and you break the previous left side high, it should take you to at least a D. You need a little bit of evidence for it when the cup is as shallow and short as this one is in time, but everything worked out. So now we've got our D. Next thing, I look at the MACD, the moving average convergence divergence. If you look at the green 9-period differential and the 26 period time lapse, the red one, the green is the faster moving average, the red is the slower. Look at the distance for this to cross negative. In other words, for the green way up here to cross the red, which is at 16.38, I'm not even sure where the other one is. Let's say it's at 20. If for it to go negative, I would imagine that yesterday, 3 days ago, the low of 26.05 probably would have to be taken out, but it would not be able to be taken out, just taken out. It would have to be that the S&P actually closes below that level, probably 2 out of 3 sessions. And then finally, I think you'll get the MACD about to cross negative. That's number one. In fact, I think it might even take more. The stochastic, however, is a shorter term duration, look back period, 14 days. And it is trading right now at 83%. It was up in the 96% area. When the S&P made its last series of highs, it was actually coming down. That to me is a negative divergence. The on-balance volume made a double top way back in the November the 6th and November the 8th, as the S&P made its peak G2597 high. So that says that only the MACD is really strong. It's important that the 9-period differential is good, but it's saying to me, be careful not to overthink the short side just yet until you see more proof. And the proof has to be that the stochastic actually goes below 80% and the MACD really takes a dive in the 9-period moving average, because if it flattens out, it doesn't say you can't go down, but that acts like, I have these visuals. Let me try to explain what I'm thinking. That acts as a yo-yo. When you bounce the yo-yo and you've got the string up here, the yo-yo is going to go down, and then it's going to come up. I'm saying yo-yo rather than an elastic band. Elastic band would imply you could, if you go deep enough, spring back and go to a new high. I'm just saying, at the way I'm looking at it right now, I'm thinking more a string where the price goes down. So all of this is gentle, which takes me to the weekly chart. The weekly chart is very strong, and it says you could see for the month of December maybe a modest new high, just a nominal new high, but you could see a chop, chop, chop. And I'm going to put this in right now. Since you just talked about it, I was going to do that for tomorrow. I'll do it now. I could see a range, a rectangle range unfolding that has the low 2600 as a low, but it keeps on finding some rotational support to keep the S&P somehow or other within a trading band, let's say of 2667, maybe 2673 maximum, and 2605, 2600 on the downside. That's what I'm looking at. Now I can go to the next step. And the next step is, when you talk about correction, market corrections, none of what we're looking at right now is what I talk about over and over and over for years now, that a bear phase requires that the futures open double-digit down. There is bad news that has been in background, which becomes foreground, and you've got to hear that news just start to filter into the market. If it gets too exciting, like on Friday, that VIX index is going to scream to the upside and then collapse and give you support. That's what happened. That's why I'm thinking we've got support. That's why I didn't want to go short for subscribers, anything other than specific areas, but not the Dow and the S&P. But what's really important for me, and I'll make it very clear, you got a good question. My answer to you is, if there is a close in the next 2 weeks below 2,600 in the S&P, we have begun a deeper correction. And if there is a push above 2680, I have to consider that we can still chop with slightly higher highs and maybe even slightly higher lows, at least for December. Then I'm looking at January as potentially being a deeper correction month. Does that answer?
Can I ask you one follow-up, please?
Yes.
In looking at the thousands of chart patterns you've observed over the years, in looking at that pattern that we see on the S&P weekly,
yep.
I notice how that advance the past couple of months is walking up the 9-period EMA just beautifully.
Correct.
With a market that does that, in your experience, when it does top and turn lower, is the first move down typically a move that goes down and breaks decisively under the 9 EMA, then bounces back up to it, or alternatively declines to the 9 EMA and then bounces from there? That's another question that pops into my mind.
So I hope I can find the chart that I spent some time on. This is an incredible chart. Let me see if I've got it here. Can I press that? There we go. COC, I want the weekly chart. I think it's the weekly chart. I hope I'm going to do this correctly. I don't want to mess things up. Yeah. So when you're looking at this, no, it wasn't. No, what a pity. I had a chart and I wrote it down, but it's in my Friday webinar. I came across it by accident. I just don't think I'm going to be able to find it here. Let me just give me 1 second.
Surely.
Oh yeah, there it is. Okay. No, that's not the one. All right, I'll find it for tomorrow. I can't find it offhand. It's the pattern I call the worm. What it does is you see a pattern where the price is basically walking the 9-period exponential moving average. You see, in this case, the S&P has twice gone, at least for 1 bar, maybe 2 bars in the weekly chart under the 9-period moving average. I'm looking at a chart, I'll find it, maybe in the break I'll be able to find it, where it walks the 9-period moving average and it just goes on forever, and you're looking at it and you say, I could have bought it anywhere, but it just keeps going up and it never pulls back. So I'm going to talk, this is a great question, and I'll explain exactly what I'd be looking at. Can you hold on?
Thanks so much.
Okay, we'll be right back with John in Philly, and we'll be talking about the worm pattern.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. I found the stock that I was looking for. I used to follow this, and I didn't, and then I started looking at it because it had earnings. So this is DHI. This is D.R. Horton, a home builder. Look at this chart. You see the chart started right there, back on the 29th of August at 34.95. Yes, it never closed under the 9-period moving average. Just a little, it hit it, but closed right on the 9-period moving average. And then it kept moving up and moving up and moving up. Only today, 2 days ago, it tested the 9-period moving average, closed above it. Today it's testing it, might close above it. But what I'm looking for, you see the way the MACD is turned down? See the way the stochastic is still strong at 84% because it's over 80, but it's turning down. But the on-balance volume is hinting that there's just enough residual strength. Buyers still want to keep coming in. So now keep your eye on this pattern. I'm going to make it a little bit bigger. Okay, keep your eye on it. Here it is. This is the daily chart. That's the monthly. This is the daily. Keep your eye on it. See that 9-period moving average? You see that support? Watch this. This is an answer to John. John said he's got to go, but he'll be listening in the den. You see, we've got something kind of similar here, but you've broken under the 9-period moving average. So this is suggesting that you haven't got the same buying intensity, but you've got almost the same pattern. If I had to draw, DHI, right? Yeah, if I had to draw a channel, and this, I speak about this very often. Years ago, when I'm almost sure it was one of the pharmaceuticals, it might have been Merck, I just don't remember. But there was a pattern where this stock would just keep going up and up and up. And every time it tried to pull back, it just didn't. And it made this narrow channel. Well, when you break the channel, finally, on not the upside, well, it can be on the upside, but if it chops on the downside, it started a moment of weakness. That doesn't mean to say it's going to break down. What will say it breaks down is you have to look to the left and say, where was there a cluster of dojis? Was there a trough of importance? And that becomes your focal point. That's the only way you can do it because you've got nothing else other than your MACD stochastic, which is some information, not all the information. You want to see price weakness. So now let's do the same thing with the answer with the S&P. And then I've got a ton of questions I want to get to. Look, the S&P, I could draw a channel right here and make it real clear. I did this visually, but we'll do it in real time right now. Right there. There's that 2600. So let's make this one, make it solid, make it thick, make it red, and that's it. That's the way. I just make it real simple. I'm going to be teaching how these trend lines are important. Look at this trend line here. Yeah, actually, this is a little different because it is, I can't do a parallel without saying it's broken to the upside a little bit. Look. just a little bit. That would be green, because if it just closes decisively above it, this is the opposite of what you'd expect. You would expect, and this is what I'm going to be teaching, that would be a red line and say, oh my God, red line. No, it's green. I've got another red line. I don't like to make charts messy, but let me just show you exactly what I'm talking about. I would then take the red line and do another one up here. I do dashed so that it doesn't make a mess. And I make a green line and say, these are my parameters. And for me, it's very clear. Look, there it is. So that says a close, decisive close above 2657.19 pushes you way above the resistance. This is the Chapman Wave inside track. I'll be teaching that as well. Here's your support, and it says 2626 is the daily 9-period exponential moving average support. If it takes that out, expect to test the low of this candle, 2605. All of a sudden at 2605, you're testing the green line. That's really what has constituted before a buy zone. So that's the Chapman Wave inside track buy zone. So that gives you all the clues. That's why I'm saying that if you close decisively under it, boy, you go to 2588 anytime in December. And that's the saying, consolidation has begun. It's going to impact the weekly. John, I hope that helps you at this particular point. Look how strong the MACD is. And the stochastic's good, not great, but it's good at 83%. Okay, now let's go to other. Let's go. We're going to go right from the list of questions I had. So bots was a question. Can't remember. I think it was Tim. Bots. No, that wasn't Tim. All right, I had a question about bots, which is the robotic. Ooh, wrong. That was Greg. So Greg, we've got. Let me just double check here. Greg, we've got bots at 2340. This is the Globex Robotics and AI ETF. I think it's done for now, both in the daily. I believe in the weekly. I mean, when I say done, I mean it's not going to break above 2485 at least for the next couple of weeks. It has to do a lot of testing before it can do that. But the weekly chart is saying no. This time we might have a bounce, and it could have a bounce to 2340, could bounce to 2420s. I don't think it's going to go much higher than that. And then it comes back down in an H pattern. So the question is, question was bots. I'm in a small position at 20.22. Well, okay, now because you're in a small position, you've already seen it go up to 2485. I believe you must be holding it. So that says you cannot take a loss in that position. What I am going to say to you, if it goes below 2318, I would take a good chunk of that off. If it rallies, have a trading stop. 2392 is the 9-period moving average. If it can even touch that in the next few days, I'd say just keep raising your stop on half your position, and the other position could be just a little above your entry point. Your other position should have a stop at about 2340. If it goes to 2324, touches 24, I'd raise that stop to 2320. I don't think it's going to be a runaway to the upside. I think it's in a consolidation. I wouldn't add. No, the question was, would I add? Okay, next question is AIG. AIG is, in fact, at 59.77. It's making the potential H formation both in the daily and the weekly. So what was the question? I'm in a small, AIG. I have a small position at a lower price. Would this be good to place another add-on position? I actually think yes, but I'm also going to say no. Just have patience. If at any point AIG at 59.76 takes out the low of 58.52, I'm out. That's it. I'm done. I wouldn't be long. But if it manages to rally Wednesday, if it hits 60.16, you can add a small trading position. Why? Because this H pattern, another pattern I'm going to be teaching on Friday, this H pattern becomes quite bullish because it reverts to the potential for a cup formation. And that says the next level of resistance could be just a tad above 60.48, the high of the fourth. That's yesterday. So I would do nothing. If it rallies about 60.19, I then say, okay, now you can add a small position. I'd have a 50-cent stop. I wouldn't mess around. It's going to either work or not. If it works and it gets to 61, you've broken the 9-period moving average of the weekly chart, and that's a positive. But it's the H pattern. This is the one that is, it's two fighting patterns. The MACD is improving, the stochastic's improving. It should actually be a little higher today than it is. I want to see it well into yesterday's red candle. Okay, but I would not get too carried away. Question about the home builders, HGX, HGX. Wow, I've got a lot of questions to cover. I'll try to cover them all. Oh, and then the question about, what was that? Snap. Yeah, HGX, be real careful. I think this is a peak F in the HGX and Snap. Congratulations to S&P and the Dan. Beautiful move in leg C and D. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So let's just do this. A question about CRC. It's a CA, Resources Corporation, I believe. I've used this for Friday for my instant restart on the way down, potential Chapman with instant restart, and then it goes to a G/C, finally goes to a D. Big move up. It looks great. It looks like it's forming now a cup formation. How these patterns form cup formations is really important. I wanted to also show, what was it? Let me go back here. Oh, Snap. So Snap in the Dan S&P wanted to know about, fabulous move. It's gone right to the 14.90 area, and that's going to be very important because it broke out of the rectangle. My contention always is that if a stock gaps down, starts to go sideways, and then breaks out a little late, it needs time. It takes about a week or two or three, and then breaks out to the upside, fills the gap. That's usually a very good sign. It starts to form a base in the area before that was struggling at. And here's the pattern that I showed for my subscribers to my opening call. You'll get that free. You'll get my CD included if you do my course on Friday. The one's 128 value, and others 245. But the pattern that I showed this morning in the E-mini, the cup formation fighting the H, the lowercase h. I just spoke about that a minute ago. There it is. It's working nicely here in the weekly chart of Snap. This is a good sign. And let me see a couple of questions. XLF, XLF is kind of stalling right here. It's the TLT you got to focus on. TLT keeps moving up sharply. That's going to say money could start to soon flow out from bonds into stocks. So don't forget, go to the front page of TFNN right there, and you'll see listed my Chapman Wave. We call it Master Trader Series because it's part of these intensive courses, but it really is for people just learning the Chapman Wave. It has to do more, not just with Chapman Wave, it has to do more with learning about these cup formations. Look at this. I drew in for my subscribers to the TLT. I said, there it is. There's resistance right there. One trend line, and bam, it hits it to the penny and pulls back. Then it hits the 200-period moving average I'm going to be talking about to the penny and then rallies. These are simple techniques. All you need to do is to add them to your software package. Everyone has it in their software. Put it there and we'll do it step by step. The naked chart and then add all these different techniques. I'm really looking forward to it. Dow's down 25. Stay tuned for Steve Rhodes and got all the other great hosts coming up today. I'll see you later on.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you would invest